Hello and welcome to the Friday market update. Okay, WTF, what happened to the rates this week? Hey everyone, what an absolutely wild week in the markets. If you're wondering why mortgage rates just spiked 0.5% out of nowhere, you're not alone. So let's break it down, talk about what it means for you and your buyers. And to say the markets were volatile this week is an absolute understatement. So on Wednesday alone, Wall Street saw 5.5 trillion. That's this thing. It's more than a billion. It traded in stocks this week. Yes, in one day. It was like someone hooked up the stock market to a defibrillator and boom, you could see it all explode. So the S&P surged on fake news, adding $3 trillion in value at the beginning of the session, and then crashed $2.5 trillion just hours later when the story was corrected by the White House saying it was fake news. Total chaos. And typically when the stock market crashes, mortgage rates come down. Investors move their money into a safer asset like US Treasuries, and that helps push rates lower. But this week, that rule book got thrown out the window because so much of today's market is run by algorithmic trading. We didn't get the normal reaction. Instead of money flowing into bonds and calming the market, everything moved erratically and mortgage rates went up. Add to that the global tension around tariffs. It was a tough week. Even though President Trump announced a temporary pause on some tariffs, the bigger picture still has the market spooked. The back and forth with China is heating up again. And while TikTok seemed like a big problem and getting TikTok banned, we're getting headlines this week reminding us that the trade wars have real market consequences and they can spike rates faster than any inflation report. We kind of call it the black swan. So here's the kicker. Taking out all the tariff activity, we actually got some good fundamental news this week. The CPI, I talk about it almost all the time, inflation and jobs. The CPI inflation report this week dropped from 2.8% down to 2.4%. And the core CPI, which is very important and what they look at, takes out food and energy, dropped from 3.1% down to 2.8%. That's real progress in the fight against inflation. Normally, without all this stuff going on, that kind of data would have led to a huge bond rally and lower mortgage rates. Now remember, the Fed target inflation is 2%, so it is absolutely headed in the right direction. But this week, the inflation reports took a backseat, way back, more like all the way back to the very back of the bus to all of the trading volatility and tariff headlines. So where does that leave us? Right now, rates are sitting above 7%. And many buyers are freezing up. They're waiting for things to settle down. But the reality is, this is when the smart money moves. We're in a transitional market. While many well-priced listings are flying off the market, there are still many, many homes that are sitting a little bit longer than the seller likes, and they're getting a little bit anxious. So many sellers are more willing right now to negotiate. They realize the pain point of the buyer, which is the mortgage payment. Buyers can now ask for rate buydowns, closing costs help, and get into homes with way less competition than when the rates do come down and everything normalizes. Okay, Bill, but what happens if the economy goes into a recession? Because you're probably hearing that in the news as well. So let me give you a little historical background. In 6 of the last 7 recessions over the past 50 years, home values actually went up. Why? Because when the economy slows, the Fed cuts rates. Lower rates equals more affordability, equals higher demand, equals rising home values. The only recession where the rates went down was the Great Recession, when it was like we were handing out candy to get a mortgage. So yeah, it has been a wild week, but chaos creates opportunity. If your buyers are willing to lean in while others sit out, this could be a wealth building moment for them. As I always say, be the buffalo and run into the storm before it washes you away. So want the full data breakdown or tools to share with your clients? Shoot me a message. I've got you covered. So, and what is the best way to refer me? Shoot me a group text with your client and I'll take it from there. Go to my direct cell, 858-776-6830. Hope you all have a wonderful weekend. and have fun watching the Masters tournament. I am going to watch that and have a lot of fun doing it. This is Gaylord out.